So, thank you very much. And this is the session we're going to talk about banking clients through mobile phone financial services. And I think I have the panelists here, but I'll quickly draw the rules of the game because I think we have a time constraint. But let me start by saying that this is an area that continues to baffle us in terms of its generation. For those who are familiar with it, the first generation was purely just transferring money from individuals, between individuals across regions in the same country. And quickly moved into what you might call second generation, where you started by paying for goods and services. But depending on when you started, the two generations are actually not distinct. That is, transfer and payments are not distinctively different. But what is exciting now is actually the third generation, where we start seeing the mobile phone financial services forming a banking platform, where they offer services, banking services, insurance services, and even credit. And so it means that we have had a continuum. We can talk about mobile phone financial services as a platform that has helped in terms of financial inclusion. This session has 4 objectives. The first one is actually to showcase, for those successful cases, they need to tell us how can they showcase that success. How do we see that, that mobile phone financial services has come up with business models that actually try to actually enhance financial inclusion by linking payments platform with banking platforms and offering broad range of services to low-income individuals who are previously excluded either because of barriers to entry that are cost-related or even physical distances. The second one is actually to illustrate what are the enabling factors, and I'm sure the panelists here have maybe a lot to say about that. Are they regulatory in nature or policy in nature? And how can it be possible to extend some of these services to a wide range of countries with similar characteristics? And the third one is actually to discuss the role of policy and regulatory and regulations in those countries it has been successful, and what kind of lessons we can learn. And finally, we would like also to share information across the range of countries. We have 4 panelists here, and they have been introduced. My simple task is, the first thing is the rules of the game. I'll be asking them the opening question to each panelist, and we'll give them 5 minutes. In 5 minutes, they need to tell us the complete story, and then we can open up a discussion where I think we can have like 30 minutes or so of discussion, then open it to the audience for about 15 minutes to have question and answer sessions, because they ask always, this is an area where there's more questions and there are more experiences to share, and even more so, even when you have answers, questions still actually increase. From the time I started talking about this mobile phone financial services, I always encounter the same questions, and some of those questions generate to other questions, and they never get to the specifics of having a complete sense of what needs to be done. But I think if we look at the practitioners here, most of them from the private sector, others who are regulators like me and Governor here, we can tell you, we can see, we can try to understand both sides. So the best thing is maybe we hear from them first, because then they can tell us various dimensions. And then once we have done that, we can make an assessment in terms of what kind of information we're going to share. I can tell you that in the African setting, we have AMPI, and maybe we are also going to take up some of these questions later today when we are sharing our own experiences. AMPI is a mobile phone financial services policy initiative. Let me start with the Governor here. I would like you, in 5 minutes, I'm emphasizing 5 minutes. You may not need all of them. But I want you to tell me about Bangladesh and its recent past, how it has perhaps rolled out the banking services through the mobile phone. And of course, you can describe the success factor, what are the success factors, but also you can also tell us what are the challenges. Okay, Governor.
Thank you, Governor. I'm sure there will be some slides which will show that how Bangladesh has been moving pretty fast. How do you do that?
That one was pushing out. Okay, yeah.
Is this?
Yeah, it's working.
Coming?
Check there. No, that is for someone else.
No.
But you can claim it.
This one. Yeah. This is, oh no, it's not staying there.
No.
Yeah.
Continue.
Just the growth in Bangladesh, you can see that how fast. Just over the last 6 months, you see how these numbers are increasing. This gives you some idea about from January to July. The almost double this growth has been 10% per month, the mobile bank account. So it's a phenomenal growth. And off late is really some more competitors are coming. So this is growing pretty fast. And it's a very good business model because you can see that half of this business being operated by the agents at the village level, but there are other as well, ATMs and commercial banks and all other agents. Again, this is something very interesting. This is also contributing to financial inclusion. You can see that measure of the cash-in taking place in Dhaka, the capital, or the large along the blue one, and this being distributed all around the country, the red ones. That means it's other way around. Money not coming from the rural areas, but money from the urban areas is moving towards the rural areas. So that's the small the impact we are having on the financial, mobile banking. That why Bangladesh is pretty doing so better in terms of this model. Ours is a bank-led model. I think the clue lies there. It's a bank-led model. When I say bank-led model, what does it mean? It gives you a lot of trust, as if you are operating like an ATM. All the people who are operating, they have an access to a server, and then from the server you are being provided. So it's an element of trust. Since it's regulated, well regulated, it's a bank-led, so you have a lot of trust. Our financial services and compliance are well provided, and it ensures the depositors, banks, and financial flows through regular monitoring of the licensed MFS. We provide license to the banks, and the banks then form the partnership with other agents, including the MNCs. And there is a mandatory but simpler KYC. They receive regular financial reports from banks and MFS. So that gives a lot of confidence in the system. I thought that's one factor that Bangladesh is doing better than many countries because of that confidence level is pretty high. The trust level is pretty high. Secondly, Bangladesh Bank has been always on a very proactive and a promotional stance on this. We have been facilitating the financial sector connectivity infrastructure throughout the country. We have digitized the entire banking sector and also the central bank. Now we have upgraded payment systems so that we have online automated interbank settlement and electronic fund transfer. So these facilities are in place. That also helps that Bangladesh moves faster into this technology-based new system. Again, Bangladesh Bank the central bank has been providing incentives to the banks with donor-funded challenge funds so that they can innovate cost-effective off-branch modes of remote delivery of the financial. So that helped also going into kind of experimentation. Again, we have provided a very flexible consultative approach in formulation of regular guidelines, avoiding overly prescriptive rigidity. Our guidelines, we took quite some time, to give the guidelines, and the guidelines now, it's a very consultative guidelines, and that gives us a very good, hold on the entire system. And again, we are working with the partners like Bill Gates Foundations and IFC and all others. So we also are very, very positive in taking other support in preparing the ecosystem of the mobile banking. In addition, what we have in Bangladesh is that it's a very robust kind of system. It's a small country, but with 160 million people, the connectivity is very high, and about 60% of the people of these 160 million people have mobile banks, mobile phones, and they can be a potential customer. Again, the country has a very competitive advantage in terms of a very vibrant trading environment where hundreds of distributors daily reach thousands of shops selling hundreds of millions of items, and they are independent business owners serving essential blood flow for small and large businesses, and mobile money is yet another item in their inventory. So this is just add on. There are, as I said, 50% of them are agents already there. So there's just adding on. And again, Bangladesh has got a very good, very robust, network, grassroots networks of 618 licensed MFIs, and again with a 8.4 thousand bank branches. So these are all potential, areas where mobile bank can have their agents. So this gives a very, I would say, very robust kind of positive environment where Bangladesh has been, putting a lot of proactive kind of regulation so that the banks, the mobile banks can move in. And I think Bangladesh has done quite well. Now at the moment, they are doing simpler things as you are doing, in terms of cash in, cash out, but we are preparing our ground, and a lot of, in fact, new deposit schemes are already coming out like any other banks with the rate of interest, savings scheme coming, recovery of the microfinance through the mobile coming up, e-commerce through mobile credit card coming up. These are all in the process, and they have already started working on it, on the government to people on the social safety net programs has already started. So salary structures, utility bills, these are all started, and the monthly transaction is nearly $250 million now these days, going on in Bangladesh. So it's moving. The major challenge, if you want to tell me, the challenge is, in fact, how fast we can improve the this infrastructure, as I told, and also how the government changes its mindset to really have trust on a system so that all the primary schools salaries could be sent through these mobile banks, but the government needs to move forward in using these facilities. From our part, from our central banks, we are encouraging both governments and the private corporates to go ahead. In fact, largest Grameenphone, paying all their salaries through this kind of systems. And again, ours is a system where the bank really, provides the all the regulatory services for the banking part, and the telcos, the telephone companies, they work on their agenda and give us the connectivity. So there is a very good partnership between telcos and the central bank, and we always both the regulators, the telephone regulators and the banks, we meet regularly and we smoothen the operations. The challenge is that sometimes the telephone companies, they want to jump into the banking territory as well, and we always say that, okay, you build up the highways, and you cannot own the buses, but you can collect the tolls, and they are doing pretty well in terms of collecting the tolls and earning. So it's a win-win situation. The telcos earn it, the banks also earn it, and also the customers, all the agents, they make a good business. So together, Bangladesh is an ideal bank-led business case, and that's why it's a double-digit growth per month. And I think if things go on like that, and if the central bank keeps its eye on it, I think this could be another success story, in Bangladesh, which has a lot of them. Thank you very much. Yeah.
Thank you very much. I think very, very important success story. It's a bank-led model where trust, confidence comes in. You have promotions via the bank, Bangladesh Bank, and obviously the guidelines that you use are well respected. Of course, it's very, very important, but I also hear that you have a very wide network of microfinance institutions. But the challenge is that the government is not paying through the system to beef up the system. So essentially, these are interesting things, and we may pick up some of those questions later once we hear about the other regions in terms of how the banking products are developing. Because one of them is the network there. The next thing is, what about the products? And because the products are the ones that deepen the market, the products are the ones that develop the market. You can have the infrastructure, but is there a product uptake? Is there an innovative way of introducing new products? And we'll come back to that.
The products.
Eric Jage. This is Commercial Bank of Africa and Safaricom. You have partnered successfully and introduced banking products. The latest one is the M-Shwari. Perhaps you can try to help us understand this model and also share with us some key lessons as well as the main success factors. And of course, you have any pitfalls or challenges that you're facing?
Okay. Thank you very much. As you've said, Commercial Bank of Africa partnered with Safaricom, which is a telco in Kenya, to launch M-Shwari. M-Shwari is essentially a mobile-centric savings and loan proposition. And the partnership, we came together really to look at the third dimension to financial inclusion. I call it third dimension in the sense that M-Pesa as a mobile payments platform has done a fantastic job in widening the coverage of financial inclusion. I think I would say largely because of M-Pesa, we've seen financial inclusion grow from about 40% to close to 80%. If you just count a mobile wallet as a bank account or as a statistic. But we call it the third dimension in terms of deepening financial inclusion in the sense that going beyond payments, we now are able to offer a savings account and offer very accessible credit that is both offered by a bank. So the debate for us really is not about bank-led or telco-led as far as it comes to savings. Savings by regulation in Kenya or deposit taking by regulation in Kenya can only be performed by banks. And what we have done is then by partnering with a mobile money company that has, to use the analogy, developed the rails or built the highways in terms of offering a channel to the market, we then have been able to fashion a value proposition to customers that has been able to attract deposits. We've been in business now for just over 8 months. We're in our 9th month of service. We've been able to attract 4.6 million customers onto the savings and loan platform in the bank. From those customers, the deposits that have been generated in US dollar terms is about 24 million US dollars at any point in time. And in the 9 months, we've been able to disburse about $47 million of credit. And we're talking about microcredit. The average transaction amount on the credit side is between $15 to $20. And, but the credit proposition starts from as low as $1.5 up to about $200 to $225, depending on the exchange rate. And we identified this as a significant gap that was in the market. In the sense, there's no bank in Kenya that was offering credit at that level. It was too expensive to mobilize deposits that we were all convinced from various research that we had seen. Those huge pools of deposits that remained held by people informally. And what we have done with this proposition is really to formalize those deposits, to bring them into the banking system. And by being able to attract those deposits into the banking system, what that means is also from a regulatory perspective, the regulator has greater insights as to what exactly is happening with respect to micro savings and micro credit. And hopefully that continues to inform policy making. The product, as I've described, is purely mobile-centric. That is, the way the customer enrolls onto the service and how the customer experiences the service is purely over the mobile channel. There's not a single piece of paper that is signed. The customer enrolls and the KYC is done purely through the mobile channel, and the KYC process is also integrated to the government registry of persons. So we're able to verifiably establish that each person that gets onto the service is positively identified. Speaking in terms of the success factors, the things that enabled us to be able to achieve this, one is as the KYC process that I've described, the fact that two industries were able to come together, that's telcos and banks, and share data. It was not the easiest process. It's something that took us about 2 years of discussions to be able to understand the interests of both organizations, understand the legislative environment, legal requirements, things to do with the consumer protection, to be able to fashion out a cooperation agreement that is appropriate for both the bank and the telco. We also had the benefit of some very useful, I call it legislative infrastructure in Kenya that allowed us to be able to perform electronic contracting, which this would not have been possible if that was not that was not available in Kenya. From the transacting point of view, or how the customer experiences the service, we definitely did benefit significantly from the M-Pesa brand. And when I say brand, it's not just the brand, but also taking into account the investment that telco had already made in terms of micro agents, the trust that had been built onto the platform, and we're now delivering a banking product on that platform. It was also very useful for us in Kenya to take into account that the market had already shifted significantly to embrace the mobile channel as a service delivery channel. And that was, it's a very simple thing, but to be able to launch a proposition, particularly when you're targeting scale, the market needs to be prepared and receptive for such alternative approaches to financial services delivery. From a regulatory point of view, we had very consultative engagements with our regulator. We spent about 2 years in product development, and every month or 2 months, we were always engaging with our regulator, and it was quite refreshing for us, whereas the engagement was one that was driven from a consultative basis, very risk-based approach towards understanding what we're trying to do, what are the challenges, what are the risks around that, and how do we propose solutions to address those risks. I would say the key challenges for us at the time during product development, and also today as we're trying to push further penetration of the product, has interestingly been financial literacy. When we started out, we did not expect this to be our biggest challenge, but to be able to develop a proposition for savings, we immediately realized that selling mobile money is very different from selling savings on a mobile platform. To be able to educate the market to understand how does my behavior on the savings side contribute to access to credit, what does the CRB mean in terms of helping me get higher access to credit or lower cost of credit. That has continued to be the greatest challenge for us, and we're hoping that the continued adoption of such models across other markets and also getting more stakeholders onto this bandwagon will help address that challenge.
Thank you very much. I think your starting point is to say that you had this M-Pesa platform, so yeah, there was a market. To move it to the next level, that was very, very encouraging. But now you are saying the challenge is actually managing micro accounts.
Yes.
Technology of managing micro accounts. So when we come back, you may want to tell us about the M-Shwari and the credit scoring.
Okay.
So that is, it's a technology for managing micro accounts. But also, financial literacy becomes quite one of the biggest blocks that you may want to deal with. Let me get to Tessie, and the starting point is actually to, you have benefited, the Banco has benefited from the results of close dialogue with the regulator. And the regulatory challenges that have been resolved has actually benefited, or you have even benefited of created a very enabling environment for the success of the business model that you have. But maybe you can tell us what advice you would give the other regulators to establish an enabling environment for a banking model like the success of the banking model that you have had with the mobile phone financial services.
Thank you, Mr. Chairman. The name of the bank is BPI Globanco. It's based in the Philippines. Thanks to the very supportive leadership of our governor, Central Bank Governor Titanco and Deputy Governor Espinilla, they created and implemented an integrated regulatory framework that brought in not just banks, but non-banks into one framework that is scalable and implementable to the farthest flung islands of the Philippines. We're operating in a 7,000 island country. And if you look at this, what infrastructure will work in that kind of environment, in all the infrastructure available in my country? The mobile phone. So it is a very unique marriage of three industries, as our names say. Bank of the Philippine Islands is the oldest bank in the Philippines and in Southeast Asia, 163 years old, and a leader in banking. And Globe Telecom, which is one of the two telco in the Philippines, and our parent, the Ayala Corporation, known for its socioeconomic leadership. So it's a very unique marriage from the very start. And I may say it's not an easy marriage, but we're still here. And I think that is really the only way we could really work together, to be married at the very start. It's very hard. But those challenges were really helped because of the environment was so enabling. And to prove it, I will even quote sections in our regulatory framework that made us happen. So the first pillar that the central bank gave us is a technology risk management system together with the electronic banking for banks. So this is under Section 176 and Section 701. So what this created is an ability to launch electronic-based products. And our central bank, we report to them, we describe the product, and their role is to really see risk and mitigate them. We give full transparency to our clients, and they help us provide a BCP in case the system fails. So it is a continuous evolution of products until we come up with a very sustainable and scalable product. So it's that kind of environment that helped us develop. Banco is primarily operating only on the mobile phone. But of course, as an alternative, we are also available real-time in the internet. And we have an ATM card that is available in all the ATMs in the Philippines and soon in the POS. So it's a marriage of new technology, mobile banking and internet, and old technology, ATM for the ATM card. Because that's the way to go to the unbanked. Give them something aspirational and what they understand, plus a new technology that will give a cost reduction platform for us. So the second thing that they helped us with is, of course, an electronic money network service provider, where they now bring in the non-bank. And this provides a non-bank, like our Globe Telco, to be within the wings and regulated by the central bank for building an agency network. So we use the agency network licensing of Globe, and from that, Banco can deliver our products, which are primarily bank-led and savings deposit-led. The initiating or the enabling product is a deposit account. But when you come to our agent, you already apply for 3-in-1 because we know that is the most expensive face-to-face interaction. So in the 3-in-1 product, you already sign up for a deposit account. So we give you they give us their 11 mandatory anti-money laundering data, your name, your address, and all of that, and an ID with a signature and a photo. After that, they also sign for a potential loan. So after the banking relationship has been established and we are able to credit score our customer, you will get an advice that now you can start borrowing. Because we look at your pattern of usage, your balances, your airtime loading with the cell phone. All of those are data that give you a footprint. The beauty of a bank account is it leaves a footprint of your financial activity. Unlike if you transact in cash, no one ever knows your cash in and cash outflow. But in a bank account, as mandated by the central bank, we have to keep your record for so many years. And so we can study those data and give you a credit score. So, but you signed already the promissory note at the very beginning, so you don't come to us. You can apply at the mobile phone already, and you don't have to see us again. And the third product that we introduced together with bundled with that is a life insurance. Together with our deposit account, with a very hefty 3% per annum interest, which is unknown nowadays, we also give a free life insurance 5 times the value of your deposit at time of death. And it's culture in the Philippines. People don't like to buy insurance because it seems like, oh, I might die because I prepared for it. So we address that cultural anxiety by giving it to them free. So part of the interest that we give them is a premium to the insurance. So at the time they apply for their account, they already sign up who their beneficiary is. So if they don't have to come back. And after that, we also give them a voluntary property insurance because that is something that protects them holistically. Microinsurance is really a challenge product in the Philippines because I guess in the hierarchy of needs, people always misplace the value of insurance. But you can apply for it in the mobile phone, and we have sashayed it such that you buy it on a monthly basis. It gives you protection for accidental death, fire, and flood. No exclusion because the bank owns the insurance company, so I was able to twist their arm to give me this benefit. All of this was also supported by a consumer protection regulatory 162 and the money transfer regulation of the central bank. Because of that, we now are able to protect our customers. We give them, because we're all purely mobile, we are mandated to operate a call center 24/7 that they can call anytime. So maybe we don't really have a lot of branches, but we have agents, and the agents may be closed, but 24/7 they can call our call center. And in addition, since they are already part of the arm of the regulated bank, they can go to the website of the central bank and put all their complaints about us. So it's a very, very consumer-protected environment. And lastly, they also came up with a regulation on outsourcing and insourcing an e-wallet. So in this regulation, our account initially starts as a wallet at the time it is opened at the agent, because it's still an outsourced service to them. After all the application form, the signature and ID are brought into our office, so we have our employees who go around and they manage about 40 partner outlets. They pick it up. All of those are scanned and digitized in our office. Nothing is manually encoded because paper is not generally a commodity in our office. We don't have any filing cabinets. So what we do is we scan them, digitize them, and a bank officer checks that they're all good, and the account is approved, and now it's a bank account. And the customer receives an SMS with us that they are already a bank account. But what's unique about our mobile service, though I'm owned by a telco company, our mobile account doesn't need an airtime load. So if your SIM is empty, you can continue to bank. Because when we did our research, our initial deployment, the nanais or the mother said, you know, I only load my phone once a week. I'm a prepaid. I use it only once a week. So you mean I can only access my account the time I have load in my phone? So we went back to the drawing board and developed this application, which we own. We run our bank 24/7, and you can transact with no airtime because it's free for the customer on the airtime basis. So now your airtime on your phone is between you and the telco, and the bank doesn't eat it up, because I'm sure we will argue on who consumes the airtime, because clients forget that they made the call last week, and you know. So the other unique thing about our application is there is no batch processing, because you're always worried 24/7 is not really 24/7 because the bank goes down in the evening. We don't have any batch. We're really 24/7, and we have no reconciliation with our partner outlet because we designed our system that it is a paired transaction between two wallets. So it's a wallet, an agent, and a client when they're cashing in and out. It is a paired wallet between an employer if it's payroll. It is a paired wallet if a government is being paid for some taxes. So if that pair doesn't consummate successfully, everything is reversed. So our whole concept is full automation to lower our costs and be able to serve our customers. Right now, we just recently launched, we have about 500,000 customers now, and the average deposit is 10 to 12 US dollars. It's really tiny, but put together, they're really a lot. Our loans products are very unique as well because we loan to our customer instantly. You may be caught in the traffic and you need money to load and call your wife that you are like stranded. If you have a deposit with us and you want an instant loan, you can apply and you will get a credit for $1 or $2 to just get by for the day. We also are lending a value chain. So we're lending not in the coal. We partner with Nestle, with Unilever, with Lafarge for cement, for Philips for lighting. So we can lend to the stores, and the money doesn't end up with them. They cannot buy and shop for a television. It goes directly to the distributor. So what we do is a complete value chain lending for all industries so that the credit evaluation is strengthened by a deeper partnership between the distributor, the retailer, and Banco. And lastly, we also do SME lending for startup companies, for internet cafe. And that partnership is done through the manufacturer or through the dealer. So our model is partnership with existing establishment, and we complete an ecosystem so that we're sure to be paid, and everybody wins in the ecosystem. Thank you.
Thank you very much. Thank you very much. It's an interesting model where you're talking about a unique partnership, but also talking about convenience for customers who are using very micro credits and even deposits. And obviously, the incentive for life insurance is an interesting one. But I think we'll come back to products in terms of how we can move forward. But before we do that, let's first of all complete the cycle. I'm going to Carlos Ropes here. Maybe compared to Asia and Africa, the mobile phone as a channel for banks plays not a very significant role in Latin America. But perhaps maybe you have learned some lessons in terms of where we should be going. Perhaps you might want to tell us where the future in terms of mobile financial services in Latin American context is going, and maybe your thoughts about where you have come from and the way you see the future. Carlos.
Do you have the...
Yeah, the green one is to move forward.
First of all, thank you for the invitation to AFI for participating in this important forum of financial inclusion. First of all, I want to say that all that I'm going to present and all the business models that we are developing in Latin America wouldn't be possible without the adequate regulatory framework. Then I am sure in the last 10 months that I have been working for BBVA that it wouldn't be possible to launch the things that we are launching and the business models we are creating without the adequate rules. And I am sure that these new regulatory frameworks are really decreasing the cost of client acquisition. And that is very important because if not, we wouldn't be possible to offer products and services to the base of the pyramid. Here we have people from all over the world, and just to tell you who is BBVA around Latin America, even when it is a Spanish bank, a European bank, it is really an emerging markets bank that is basically focusing their operations in Latin America. We have operations in 10 countries around the region. And in all of them, we created the financial inclusion segment, that is people that is earning less than $400 or less every month. And how can we design and create different business models to serve them and to really satisfy their specific needs? financial needs that we all know that they already have. Now, talking about mobile financial services, we have always been focusing the discussion in terms of P2P. And I wanted to present here something different. Even when we have several P2P platforms that we are developing in the region, I want to focus more in the P2B. And here is where the world of micro SMEs is merged with the world of mobile financial services. And I know here there is a working group that is also focusing their efforts in SMEs. And the bank is also trying to do something different in terms of mobile financial services and SMEs. What is this? We have a product that is called Celularizate. And we have been developing this since 2 or 3 years ago, and we have had 2 big pilots that we run in Mexico. And this is to offer a solution for micro SMEs, for mom and pop stores, to give them a cell phone, and with that cell phone, they will be able to offer exactly the same services that a convenience store like 7-Eleven or Oxxo, that is one big retail convenience store chain in Mexico, are offering to the clients. Then this will level the play field for them against big retailers. But what is Celularizate? Celularizate is providing them with a cell phone where they will be able to offer different things. One, they will be able to sell top-ups for their clients. They will be able to sell financial products and services, and microinsurance. They will be able to sell a small microinsurance, life insurance. They will be able also to open accounts there and becoming agents for the bank. And they will also be able to pay their products, the products they are buying from Coca-Cola or other companies. This is a joint venture with Coca-Cola. We think that we should take into consideration and we should take the advantage of using other companies and creating alliances, because we all know that it's very difficult to get volume for mobile financial services and the margins are low. But if we use other networks and we take advantage of that, it will be easier to offer these products and services. And all these have a loyalty program, and they also will be able to charge clients with debit and credit cards. Then we ran these 2 pilots in Mexico, and they were very successful. And we have 2 years for learning what are the specific needs of these micro SMEs, of these mom and pop stores that are in every country. And we think that this is a very scalable product, and it's a solution that we can be able to export to other countries in the region, taking the advantage of this. Now, we were able of performing more than 5,000 payments to Coca-Cola with this solution. Then the cash management problem is the same in emerging markets. It's very difficult to manage cash, and we want to move these small merchants from a cash economy to a cashless economy, to an electronic economy. And I think we are starting to be successful, and we are providing the adequate incentives for doing so, for doing this. I think we are creating a virtuous cycle here in terms of cash management, where the merchant will be able to get. Sometimes now they are based in a cash economy. They are receiving and collecting money from clients in cash. But in the future, when they will start using this application, they will be able to charge clients with the mobile POS and getting the money immediately electronically in their accounts. And with that money in their accounts, they will be able to pay all the products they are buying from different distributors. And then we are creating a virtuous cycle, and we are moving to a less dependent economy in cash. I think that is the product that we wanted to present to you, and telling you that mobile financial services are not only for natural persons, but also for legal persons and for micro SMEs. And it is very important, because with this model we will be able to reach more than 60, our plan is to reach 60,000 small merchants in the following 3 years. And with that, just to make this, to put this in context, with that we will be able to increase our banking agent network in the country in more than 3 times, just with these very small merchants. You asked about why mobile payments maybe have not been as successful as in other regions and in Latin America. And I have some theory behind that, and maybe it's not the whole explanation, but there are some things that are happening different in the region than in Asia or than in Africa. I think the economies of Latin America are a little bit more developed in terms of other networks for domestic remittances than in maybe in some countries in Africa. Then that people is used to use those already existing networks, even if they perceive that those networks are relatively expensive. They have been using them for so many years, and they know how to use it, how to send money to their family and friends. Then it has been very difficult to create a clear value proposition to make them move payments from these existing networks to mobile platforms. Then the other maybe other part of the explanation is that in the region, in the countries where these mobile payments platforms have been launched, they have been launched at the same time. Then these platforms have been cannibalizing among them.
Yeah.
And they are not creating enough volume to be successful and to be profitable. And it has been very difficult to have a clear value proposition and to sell that to the clients. And maybe a third variable here that we should take into account is that in this region, if we see financial penetration is low. But it's low not only in the base of the pyramid. We know that it's low there, and it's low there almost in every country. But it is also low in terms of the other segments. Also in the higher income segments, financial penetration is low. Then if you have banks and that are growing in those other really profitable segments, it is very difficult to convince banks to have a long-term goals for serving the base of the pyramid. Why I am going to devote more resources to serve the base of the pyramid, if I can devote the same resources to the other segments that are growing at double-digit rates in some cases, that are much more profitable. Then there are just a few banks, and I can say that BBVA is one of them, that really has in their goals and in their vision, in their objective, incorporated a long-term goal for reaching the base of the pyramid. Then many of the banks that are launching things devote too few resources to do this, and for that reason I think all these initiatives have not been as successful as they should be if they devote more resources for that.
Thank you very much. I think we have heard from the panelists now. I think what I'm going to do is maybe throw in like 4 issues or questions, then we can join in the discussion, not necessarily in a directed kind of structure. Let me start. First, let's start with the theme of the our AFI Global Policy Forum. It is financial inclusion for optimal impact. Then the question we might ask is that how can we deepen the market via perhaps electronic-based products, whether the electronic-based products, whether it's mobile phone financial services, from what we have heard from you. The second thing is, how do we overcome challenges? And what should be done by the regulator, the government, or even the market? We have heard about financial literacy. We have heard about technology for managing micro accounts. We have heard about incentivizing the process, even through rights of insurance. The third is there fear of technology? And how can we dispel it so that we can allow for the market to deepen, or even to get financial inclusion, or to get the maximum impact from financial inclusion? Then obviously we need to maybe dispel the fear of technology. And finally, there seems to be this distinction about bank-led mobile phone financial services, telcos-led financial services. I think Eric says there's no distinction as long as there's partnership. You have a three-dimensional partnership. I think you talked about bank-led and confidence and all that. Is there really a serious distinction between whether it is bank-led model or telecom-led model? Is there any real distinction anymore? Maybe those four issues can help us actually throw in some few, perhaps, answers from your end, and then we can open up to the rest of the group. But it's very, very important to actually ask, how do we support this year's theme of the AFI Global Policy Forum? How do we perhaps deepen the market for financial inclusion to gain optimal impact? Let me start with Madame this time. Yes, sir.
Okay. In the case of Banco, we are primarily addressing financial inclusion goals through our focus on the products and services that are inexpensively delivered to make it businessly viable and sustainable. So our way of doing this is our products, especially the deposit, has very, very minimal requirements. So anyone and everyone with one government ID, which they can get from their barangay chairman, can open an account. We make it as convenient as walking to the neighborhood store that they know. Our partner outlets are reputable institution that is within your community because it's a trust business. Banking is a trust business. They believe that Bank of the Philippine Islands is a bank, but now it's outsourcing it to this guy because they carry our logo. So now I can trust them my money. After that initial trust is made and they come, our biggest challenge is really consumer education. We are doing 2 levels of education. The first level is financial education because these people only have like $10 or at most maybe they'll have what, $100 money. So why will they still put it in a bank? Why will they still do that? It's under the pillow, maybe good enough, I can get it. But the whole concept of being able now to avail, we have to teach them that because you put your $100 in a bank, now it's leaving you a credit history, and now you can borrow and start a business. And then you can get insurance because now you can protect your life. And then you can now do other transactions cheaply. So it's that evolution, that kind of education that we teach. Then after that, and the hardest part, and we tell them, oh, by the way, you have to do it in a mobile phone. Philippines has the highest penetration of mobile. We do 2 billion SMS a day, and there's about 86% penetration of mobile. But they're used to using it for calling my mother and my family, not financial. So there's a lot of trust building. Initially, the name of the bank was Banco. We were hiding the name BPI because we thought that, ooh, that's the big bad wolf. That's BPI and Globe. But then we realized after research that the trust was very important, so we had to put back the name. So when we launched, we had the name BPI and Globe. So those are the things that we're doing, and it's now a few early believers. So normally there's a leader in the community, and then when the leader is successful a few months, so we normally get their barangay chairman, we offer them to open an account in their partner outlet, and then word of mouth, it spreads. And then we have a very we use television advertisement to begin more credibility using a trusted famous person to endorse the bank because this is someone that they can relate. I'm amazed on this guy because we seem to be saying the same thing. I've been lecturing, or my people are lecturing the people. But when this TV idol says it, and he seems to be saying the same thing as I did, they understand.
Okay. Thank you very much. We have to manage time. Lopez.
Yeah,
we create in 2 minutes.
I think in terms of impact on, or how can we increase impact, at least for the Latin American region, I think there continue being a confusion between banks and telcos about the difference of what is a channel and what is a product. Even when that sounds that is something that all of us know, that's not true. Many banks are fragmenting the networks, the cash-in, cash-out networks, and they are not interoperable. And they are launching many platforms at the same time, as I mentioned. Then it is very important to understand and to make all participants in the markets understand that one thing is the channel, the telecommunication channel that we have, and we should not fragment that. We should have interoperability in that, and we should have a very spread and deep cash-in, cash-out network that all participants can use, because that gives us network and scale economies. If we are not able to do that, it will be very difficult to create volume and to create profitability for mobile financial services. And the other is now, if all of us understand that one thing is the channel, and we should share the channel as we shared POS channel or as we shared the ATM channel, on top of that, we should be able to build and to create differentiated products. Each bank and each telco can create differentiated products with a very specific value proposition. And there is where competition should be, in the creation of products, but not in the use of the channel. If we continue fragmenting the channel, it will be very difficult for the different banks and telcos to create profitable business models.
Thank you. Governor, you still answer some questions from the audience. So I can give you 2 minutes to maybe try to deal with the issues of market deepening. How do we overcome challenges? Is there a fear of technology? Is there a distinction between bank-led model, telecom-led model in these financial services?
No, as I told you, I think the trust element is more important, and I think when I talk about bank-led model, is the element of trust which we are instilling, because the central bank is providing the license and giving the guidelines, monitoring, in fact minimizing the risk, the P2P transactions. There can be a lot of fraudulent activities, so therein you have to set up the risk minimizing guidelines, so that how many times you can withdraw over a month, what is the highest limit you can do that. So those sort of minimizing the risk, that gives you a kind of trust which really allows the people to use mobile phone bank. But again, the central bank can also facilitate in penetration of this kind of services by providing the bank agents. When I call bank agents, in Bangladesh there is a model which is called bKash. bKash is a subsidiary of a bank. It's not a bank as such. It's a subsidiary of a bank where a bank has the majority share, and a couple of banks can have a majority share. Others can still have shares on the equity, but the banks must have the majority share, and that is the subsidiary. And that subsidiary called bKash now can have a arrangement with a rural bank called Bangladesh Krishi Bank. We have allowed 50 branches or 500 branches of that bank to be used as an agent of bKash, and Dutch Bangla Bank, another bank, can use another 500. So we are experimenting how the rural branches can behave like agents for this kind of subsidiary. That gives in another element of confidence that it's a bank, not only bank-led, is bank serviced. The bKash probably will put a smartphone in that branch, and then through that they will act like an agent, and that's how element of trust will even further increase. So that's one thing we are encouraging to banks to come in. Again, competition is the real problem. If you have only couple of players, there will be no competition. So we are encouraging more banks to come in, and already Mcash had come in, and Islamic Bank has come in. We are encouraging other banks to come in. So at least half a dozen of good players probably will improve the competition, and the cost will come down. So market will take over. So we are one of the challenges is how to instill more competition, and we are working on it. And also the another issue which I picked up, that we are encouraging the government to allow these mobile banks to give the social safety net on the labor intensive activities, provide scholarships to the remote areas where the banks are not there, and that's how and also improve the Mcash so that you can use it for e-commerce. And we have already started recently, and one of the MFIs, they have done a contract with one of the banks, mobile banks, where they will give a mobile credit card, so that that credit card will be used for e-commerce. That's how you are penetrating the market. And it's all mobile bank, the bank, and the merchant, and an NGO or MFI, all that partnering and improving the market. So as many partners are coming in, the market is also improving. And at the other end, we are also ensuring that the consumer protection is also ensured. And yesterday, as I mentioned, that central bank has got a consumer customer interest protection center that is also looking after all the complaints and all that. And we are encouraging MRA to really bring in all the 618 licensed MFIs to use mobile phones for their loan repayment, so that you don't have to visit the houses every day. So that is then it will become much more cost effective. And if we can move on like this, and I think this will, as you can use, as is improving. We are only doing the smaller things now, but as time passes, we will get into deeper kind of actual banking, as is done in Philippines. That we will be going for small loans, deposits, savings, all other things. So we are all ready, and we are engaging almost every day with the mobile banks, the banks, and other partners, so that this becomes a very vibrant kind of banking, and this becomes, at one time we feel this will become one of the mainstream banking as well.
Okay. Thank you very much, Eric. I think there are several issues that you touched on, but the most important thing is perhaps also telling us about, for you to deepen the market, you also have to maybe upscale financial literacy, as well as managing micro accounts, credit scoring, and that kind of thing, so that at least you know what's happening. But also you might want to tell us about what is the effect, what is the impact of the national payment systems and the regulatory systems that is there. I think I wanted to ask the governor, I forgot, but I think I'll come back to you on that. Yes.
All right. I think, as I described earlier, one of the things that really facilitated the ideation and concept development of M-Shwari is the legislative framework that we had. One of the key frameworks that facilitated this was the NPS Act in Kenya, which clearly draws a distinction between payment services and deposit mobilization, and defines the rule very clearly for that. And to link it probably to one of the questions you had asked earlier, how can regulation or forums like AFI improve financial access? If you look at a commercial bank or any bank, one of the two key drivers for our costs is actually the cost of customer enrollment and the cost of deposit mobilization, or cost of funds. And through regulation, we have seen that by facilitating the appropriate regulation, we are able to address these two cost drivers significantly to be able to promote financial inclusion through the mobile channel. I also probably want to touch on the question you had raised about bank-led and telco-led. And I said earlier that for us, we really didn't believe that the world is split in only those two ways. The approach we took is regulation has to regulate something very specific. So when we looked at what is the activity that is being concerned, we were not discussing payments, because payments, really anybody can do payments. Even bus companies were doing payments. But when it comes to deposit taking, then that can only be performed by banks. So that is the activity that is being regulated. And from our learnings, the approaches we took is to determine who takes responsibility for whether it's payments or deposits or credit. We looked at the financial risks that the telco is taking, that the bank is taking. And depending on the investments or the financial risks that either of the two players are participating in, then that determines the level of responsibilities and hence the proposition that will be made to the market.
Thank you very much. I think you're going to get questions from the audience, and it's up to you to answer them. I will just be...
Can I come in on the national payment switch?
Okay.
Just a minute on national payment switch. We are now developing an infrastructure on the national payment switch. Already few banks have joined the national payment switch, and this is expanding. And once we have full national payment switch, all the mobile banks and the subsidiaries we're talking about can also come into this national payment switch. So the cost will automatically come down. Not only the ATMs and others will have lower cost, even the mobile phones can use that national payment switch for any activities we are talking about. So that will reduce the cost.
Okay, let's open up for specific questions or comments from the audience. Yes, Madam. Oh, you need a...
Thank you very much. Sorry, what a great panel this has been. I have a quick question about thinking forward from a regulatory standpoint on sale of credit and insurance on these platforms in somewhat non-traditional ways and by non-traditional agents and so on. And I'm just wondering about some of the longer-term concerns on a push credit product, more or less instant click here for your loan, and also on how insurance sales will evolve, and I guess some thinking about regulatory requirements on non-bank agents and what sort of qualifications they should have when they'll be in a position of doing essentially advised sales for insurance. Thank you.
Thank you. Thank you. Let's take a couple of questions and then see whether we can get also some responses. Yes, Madam.
Have you allowed foreign remittances through mobile phones by Philippines or Bangladesh? And what are the policy measures that you have taken to maintain limits and also for the customer protection?
Okay, customer protection and limits on remittances. Yes.
Question about the uptake on banking services through mobile technology. I visited in the Philippines, Bangladesh, Kenya with banks offering these services, and most say that the uptake has been much slower than they expected, that the payments have taken off, but it's hard to move people to other banking services. Do you think that's because we don't have the right products yet, or there's just an amount of time that it takes for people to get familiar with the service, and eventually these products will become more familiar and the uptake will be much better?
Okay, thank you. Yeah, yes, Alma and
Governor Rahman probably articulated most strongly, the view that let banks be banks and take the lead and let telcos really handle the communication channel. And I heard Carlos also said that the competition should be at the level of products, not at the level of operability of the system. And I was wondering where the thinking is, because from Teresita, we really heard that you had a model where, in some sense, which was more blurred. So I wanted to see, just push you a little bit about where is the thinking in terms of this division between the banks and the telcos.
Okay. Yeah. Yes.
In French.
In French.
Stand a bit of French.
I think you have taken my one. Is it? It's okay. Thank you.
Continue.
Je voudrais poser une question à Eric du Kenya. Si je l'ai bien suivi, il a dit que les dépôts, les crédits, ce sont cela les activités des banques au Kenya. Donc ce sont ceux-là qui sont régis, donc, si je comprends bien, par la réglementation. Je voudrais savoir, est-ce que la gestion des moyens de paiement n'est pas une des attributions de banques dans la réglementation bancaire du Kenya?
Yes.
Did you get the translation?
Mansoor from Central Bank of Yemen. My question will be to the governor of Bangladesh. How, without national switch, how the transaction between, separate telecommunication companies, is it possible to do it or you cannot do it now?
Thank you. I think let's have let me have my final question from that lady, but we only need some quick summary of answers. Yeah.
Okay.
Yeah.
Okay. My name is Sophie. I'm from the Central Bank of Nigeria. My question is to the lady from the Philippines. You spoke about the application on the phone such that the person using a mobile account does not need airtime. My question would be, is the cost of the application transferred to the customer? And what kind of phones would they require to be able to carry out this transaction?
Thank you. We have like 5 minutes to finalize this session, so it means it's quite heavy. Let me start with you, Governor. You have most
Sorry,
questions.
I didn't get the French translation.
Oh, you didn't get the French translation?
The Kenyan.
What he asked was that you said there's a distinction between products that can be regulated, and he's asking, are payments systems not regulated by central banks, isn't it? That's what are payment systems not also regulated by they also have regulators. Mm-hmm. So is there a serious distinction between you're taking up the products with telecoms just because there is a regulatory position taken by the regulator? But it's something that we can talk about. Okay. Quick, one question, 1 minute, please.
Okay, in 1 minute. I think just to reinforce Amar, I think there is no such distinction. Actually, the banking sector is being regulated by the central bank, and the telephone network is being regulated by the telephone regulator. So our job is to coordinate, and we coordinate, and we don't step into others' territory, and that's how there is a very close cooperation between the two regulators, and we are moving in that. Sometimes, some companies may try to be smarter and want to trespass, but we immediately sit down and take care of that. So it's essentially we are in each other's domain, and Bangladesh in Bangladesh this relationship is doing quite well, but we think we'll need to work more when we want to sit down regularly between the regulators so that we can have a very win-win situation. That's something. Again, there was a question that without national payment switch, how we are allowing we operating on the mobile phone. I think normal conventional whatever payment systems we have developed is working. As the ATM is working, so is a mobile, because in ATM, what do? you go into first to the server and then you cash out give the withdrawal. Similarly, when you go for the mobile, you use the USSD code and you go to the server of the bank, and then from there it's like a normal banking transaction. So we get all that captured through that transaction, and it will be easier when we can have the NPS, National Payment Switch, so that will be again the uptake is slower. You're right, uptake is slower, but as I have shown you, is coming up pretty soon, almost double-digit increase every month. And it needs a lot of financial literacy program, and also the instill the confidence level, which we are doing, and is moving again. Now we, through help of the Gates Foundation, we have now exactly identified which is the area which is having more and which is not having scarce. So we will accordingly we will motivate the agents and also the subsidiaries and the banks to move into those areas where it's sparsely covered. On the remittance, yes, we are allowing the mobile banks to give the remittance, and remittance has really improved in Bangladesh, mainly because of the mobile banking. Because mobile, and not only mobile banking, we have allowed MFIs to form a platform with the mobile banks, so that the beneficiaries can get money in a couple of hours time. So that has helped improve the last year alone. It was $14.5 billion of remittance, mainly because of the improvement in the mobile banking. So I think Bangladesh is moving in a very, very cautious way, very steady way, and with all kinds of regulatory kind of coverage.
Thank you. And I can see the issue here. You see, you're talking about bank-led model. Mm-hmm. In telcos, what people have dubbed as telco-led models is that you have telco agents becoming the point of service, and that's where you get. And you are talking about you going to an ATM of that specific bank with your phone number, with your phone, and you can see the difference. And maybe that is where the discussion
telco agents are also agents. Okay. When we recognize as that the mobile phone agents, so they are as good as any other agents.
Okay. Maybe I'm sure the next issue that is everybody talks about is the interoperability and the limits of interoperability. But there was a question for you first. Okay. Have a minute.
Okay. Sorry. Regarding the mobile phone, it has no load because we're a partner of the Globe Telecom. We underwrite all the expenses in terms of communication. Our business model is pay for service, so they pay for the service. So if they're paying a bill, the bill's payment is paid by the biller. If they're doing a send money, either the remitter or the beneficiary pays. But using the engine, it's free totally. The system runs on any model, even the oldest Nokia phone in the world. We don't require a smartphone or a GPS phone. And when your SIM with Globe becomes a bank account, it no longer expires. So if you don't use it, normally the SIM expires. Because now it's a bank account, we don't require any minimum balance. So we have made an arrangement with Globe that account remains an account even at zero balance. So the beauty of it in terms of, in answer to the gentleman earlier, what's the difference with the bank and the telco now? We become the regulated body as a bank, and we create stickiness to the Globe subscribers, because now their cell phone is not just a cell phone, it's also a bank in their hand. So we add that value to the telco. And in return, we're able to use the Globe infrastructure network and reach many people. In the Philippines, only 24% of the community are banked, of the whole adult bankable population. But you will be surprised that nearly 100% has a mobile phone. So somehow, we want to convert all those cell phone-bearing, SMS texting people to a new dimension called bank. So the unique difference between the regulation in the Philippines is our central bank was able to marry the bank and the non-bank. Not in that they intrude into each other's licenses, or that's up to the central bank, but in as far as this ecosystem works.
Thank you.
Okay, yeah, just very brief about the product. I think that there has been very difficult to create adequate products for the base of the pyramid that goes beyond payments. We have seen in many platforms that payments can be more or less easily adopted, but when you go to other products like insurance or microcredit, it has been more complicated. And I think we have to learn more about the specific needs. And it's very difficult creating marketing campaigns in order of creating both awareness and adoption of products for that go beyond payments.
Okay. Thank you. Final word, just to make sure that everybody has responded.
Just specifically on your question about regulation of payments, I think for avoidance of doubt, payments, particularly the NPS Act in Kenya, is clearly regulated by the bank. I think regulation changes or takes a heavier tone when you move towards deposit taking, because the focus on deposit taking regulation is very much around the safety of the institution that is taking the deposits. There were questions on uptake. I think the issue of uptake is very much driven about the appropriateness of the product that is being offered to the market. With the Mshwari case, I think we've actually had uptake in the early days that is faster than M-Pesa. We are signing up 20,000 new customers per day, disbursing an average of about 30,000 loans per day. But it's just because we believe we've been able to align our product appropriately to the customer's need. It's also related to a question around concern around pushing credit. And we're not really pushing credit to the customers. What we're making customers aware of, by saving, you have access to credit. And then it's up to the customer to solicit for credit as and when required. There's never a proposition made to the customer for credit when they have not asked for credit.
Thank you very much. I think we have overstayed our time, but some quick, maybe 2 points about where we are going. What is our take on this? One, it's clear there's a market developing here, and we can deepen the market. And we can align ourselves with the theme of this year's AFI Global Policy Forum, that is creating optimal impact. And we can use mobile phone financial services just to leverage on that. The second one is that since there's still a large proportion of the population that is still excluded from the market, we may want to find out why are they excluded. Most of it is cost, most of it is physical distances, most of it is actually fear of the market, and perhaps also knowledge of the market. So there's a market that we can develop here. We can actually try to build on the products that are there, try to sell them more, try to make them more profitable, try to make them more secure. And obviously, the incentivized process is that we are going to create the market. Finally, I think the national payment systems are going to change in terms of the terrain. And we've heard from my friend here, Lopez, how the payment system is changing in terms of how we can actually create different payments systems. In Kenya, we have a debate about interoperability. But of course, at the end of the day, it's the capacity and the capability of the regulatory institutions in terms of regulating the evolving payment systems. And I think that's my friend from DRC is asking. Even payment systems or payments products are actually supposed to be regulated. So essentially, that's where we are going. So for us, let us promote mobile phone financial services. And that is going to help us in terms of reaching the financial inclusion targets that we would like to have. Thank you very much. And thank you very much for your question.
Thank you, speakers. It has been a lively session. And because of that, the price for that is a very short break.